heavy. Mug life, baby, yeah, we rockin' the booth. We mugging for life, we mugging for truth. Smaulgld here, and he's spitting the facts about the pumper community and the way that they act. We mugging for life, we ain't playing the games. We all know the lies and we all know the names. Come on, mugging for life, mugging for life. Smaulgld.
Hello and welcome to another Smaulgld live stream. It is Friday evening, the 20th of September 2019. And tonight's topic is cashless, negative interest rates, and the case for private money. Now, the cashless society, the concept of that has been with us. I've documented this going way back. And the reason for the cashless society is not just the government wants to pick your pocket and track and trace and tax everything you do. There's an element of that. But there's also an element of technology and convenience and ease of transaction. So it's not as if there isn't an advantage to cashless. There's also the potential for great abuse. Because if cash was such a wonderful thing, people would carry around clunky coins and they would use cash, quote, real money in silver and gold. There comes a point where using a card, swiping a card, electronic transfers are indeed easier. Now, of course, that comes with it a lot of issues. And we've had different factions supporting the cashless society. And obviously, the one that's the big proponent of cashless is the government, because they can tax and track and trace and figure out what you're doing. There's no two ways about that. You can cut down on money laundering. You can cut down on crime if the government is in control of the money and can see where it's going. Certain consumers are in favor of it, as I just mentioned. It's easier for them to spend their money. They enjoy the convenience of it. And again, we know the drawbacks when you sacrifice your control and liberty for some convenience. Also, payment processors, they're in favor of a cashless society because it's a lot easier for them to process payments if it's cashless. It's very hard for them to process cash payments. And indeed, when I wrote The Dark Side of a Cashless Society back in, I think in 2015, the New Zealand Payments Organization, a consortium of the biggest banks in New Zealand, they actually cited my work and they talked about the drawbacks to it. But of course, they're in favor of cashless society, not so much because they want to track and trace you for any nefarious purpose, other than, I guess it's nefarious if they want to track and trace you to know your consumer spending habits. But that's the same as any business wanting to know their customer. And Payments New Zealand concluded a few years back, they'll always advocate for better and more electronic payments. And there is that convenience, electronic payments. They're talking their book there, electronic payments. That's who they are. That's what they do. They want more efficient payment systems. But that doesn't mean we don't see a continued role for cash. We know the debate about the use of cash is not purely economic. And of course, I pointed out a lot of the non-economic issues in The Dark Side of a Cashless Society, which they cited, including the loss of personal freedom over your funds and the lack of control, because you are, in a sense, putting yourself in the hands of a payment processor, a government, a banking system, where they can shut your bank down, they can kick you off of PayPal, they can stop you from making transactions. So cashless does have that element of giving up a certain freedom. And I think Dostoevsky once said that money is coined to liberty. And if money is in your pocket, you're consoled, even if you can't spend it, because you can always spend money everywhere. And that's a good thing, as Bernie would say. So New Zealand went on to say, the Payment Society, we think the answer to whether New Zealand will get to see a cashless society lies more in human nature than technological advancements. Even if people do not use cash frequently, we seem to take great comfort from the tangible and liquid nature of cash. That's going back to the Dostoevsky thing written in the 19th century. It was in the House of the Dead, I think he wrote that. Just knowing that cash is accessible and is an option that is available to us seems to give Kiwis peace of mind, and I suppose Ruskies too, as Dostoevsky wrote in the 19th century. For this reason, it is our opinion that a near cashless society is possible in the future, but the last step to becoming fully cashless society won't happen anytime soon. So payment processors are obviously, banks are interested in cashless. Now, governments you think would be interested in cashless for the precise reasons of tracking and tracing, but when it comes to national security, they're a little reluctant. Sweden pointed out that, and they're a huge, one of the biggest European cashless societies, that if we went totally cashless, let's say Russia rolled into Stockholm and said, you're out, well, they can easily gain control of the money supply, the monetary system, the Riksbank of Sverige, and control the economy, and there could be no real resistance because the Swedes would not have their beloved kroner because it had been all co-opted in an electronic grab of the banking system by Russia. So even governments are not necessarily in favor of a cashless society. Now, this is all by way of background because recently there's been a lot of talk of negative interest rates by central banks and also just negative rates in general. And we were talking about, well, what happens a couple of weeks ago, I think August it was, bank alternatives saving in a negative interest rate environment. Once people realize that there's negative interest rates, they start to think about their banking situation, their spending habits. And we had an open discussion and we talked about how if you're going to lose money or your cash value by putting it in the bank, maybe there's better places to store cash other than that which you absolutely have to have in your bank account in order to pay bills. And someone suggested, I think it was Roger from Australia, even there you can prepay your electric bill, your phone bill, and not have to keep the money in the bank and lose it. We talked about gift cards, forever stamps, keeping nickels, dimes, quarters, cash, putting money on your phone, Bitcoin, Litecoin, gold, silver, many places you can put your cash outside of a system that's going to take it from you. And remember, the topic tonight is cashless society, negative rates, and the case for private money. Well, here comes negative interest rates. Now, negative interest rates and cashless actually go together, and you say, well, how is that possible? Well, you could say, yeah, it's just some crazy banking scheme, but it makes a lot of sense, and it's why they're making a big push again, or making noises about cashless. Negative interest rates are a, quote, tool that central bankers can use, as is buying assets. Now, the Fed is on record as being more in favor of buying assets than bringing rates into negative territory, and I think that a lot of that has to do with being the steward of the world's reserve currency. So they really don't want to rock the boat there, and they figure they can pay a nominal rate of interest and get countries and individuals and institutions to buy U.S. treasuries because they pay a small rate of interest. That doesn't mean they won't lower rates further, but they're reluctant to go into negative territory. Let everyone else do that. And their distinguishing characteristic will be that they actually pay 0.02% or whatever they eventually end up paying. But negative interest rates go with cashless precisely for the reasons that we talked about a couple of weeks ago. Is what are people going to do? They're naturally, in the beginning, they're just going to sit back and take it. You put your money in the bank, you lose your money. Then you start to smarten up. You start to think of other things that you might be able to do in order to preserve your money. And got me thinking is things like putting your cash in something like, obviously, the cryptocurrencies. Those are private monies. But even putting your money in gift cards is, in a sense, a private money, because generally, I'm not talking about a Visa card, you can load up a cash card at your favorite restaurants which in a sense becomes the currency you use to eat at that restaurant, Amazon cards, gas cards, and so on. Now they're using and they're pegged off of the dollar, but the valuation amount, once you put it in, you've basically given up your dollars and you've staked them to a company that is giving you those dollar credits. So once that starts to happen and you start to say, well, I only have $500, I only have $250 at any one point in the bank, screw it, I'm not going to keep the money in the bank. I'll just put the money in my mattress. I'll load it into my Cash App card. I'll do something, but there's just no point in keeping it in the bank any further. Now, just to show you that the governments are really thinking about this, in Italy, Mr. Salvini, who recently got booted from the government in the new election, was talking about the plans to tax cash. And he said, whoa, he said, hang on a minute, what's going on here? He said, lo facevano in Unione Sovietica, io voglio vivere in un paese libero. He says, I don't want to live in the Soviet Union, I want to live in a free country. What the is going on here? Well, this is exactly what they were. They want it, it's an attack on cash. How much money you can take out, how much you can have, when you can take it out, if you could take it out. And that's exactly what the banks have always done, is they've treated you loan money to the bank as a deposit. They call it a deposit, but you're lending them money and then they won't pay you back. and the terms of paying you back are, it's somewhat of a revolving credit. You give them $100 and you should be able to come and get $50, $25, $100 whenever you want. If you give them $1,000, you should be able to get the $1,000 back. After all, they're not paying you any real interest. Now, if they want to pay you, quote, real interest, then they could tell you you can't get the money back for 2 years. That's called a CD, a certificate of deposit. But the idea of a deposit means that you can come freely during banking hours or during ATM operations and grab your money. Well, they try to limit that. Now, when you have this negative interest rate situation, people start to think, oh, banks, no good, don't like it, not going to happen for me. Well, then that runs interference with the central banks and the people who try to control the economy, their ability to dictate what's going to go on. Because if they want negative interest rates, they can't have people taking their money out of the bank. So they start to advocate for a cashless society, because once it becomes cashless, you don't have any options. You can't say, well, I'll just take my money out of the bank. The reason they want negative interest rates is they want to control. This is a macro issue. Remember, when people are against the cashless society, they cite all the time, I don't want the government telling me what to do. I don't want them tracking me. I don't want them taxing me. They look at it very much personally. They're taking it very personal. This is strictly business when you look at it from the macro level. The central bank could care less what you do with your money. They care about the aggregate. And so they're concerned that what you do, not what you do, Joe and John and Mary and Roger, they're concerned that what everyone's going to do, because you're messing up their ability to control the economy. Negative rates means you're supposed to go out and spend the money. You're not supposed to be doing something else. Well, they can do these things like tax cash. They can limit your withdrawals. But here's the argument for private money. There is no monetary policy in gold. There is no monetary policy in silver. There is no monetary policy in Bitcoin and Litecoin. And there really is no monetary policy even in a cash card. Other than, they don't say you can spend it now. They might if it's some kind of sale. But generally, if you have money in a cash card and you have it at a large institution or even a small institution, you generally can spend it when you want. You can buy as much as you want. If you buy a $10,000 Amazon gift card, they don't tell you, well, I don't know if you can buy, I'm sure you can, that you can't spend $10,000. Now, by law, they may say you can't spend more than $9,000 if it's in cash. Now, that's what Australia is doing. This is the other thing that prompted this, is Australia is clamping down on cash and almost making it strict liability, like you're a criminal if you spend $10,000. And other countries have similar laws where there's a certain amount where they don't want you spending it. Now, if there's private money, it's much harder for the government to tell you what you can and cannot do with your money. So these types of rules, negative interest rates, cashless society, what they do is highlight and move that your money is not your own. It moves you away from the Dostoevsky view that money is coined liberty, that you have it and it represents an unlimited amount. Not that the money you have is unlimited, but whatever you have, whether it's $20, 50 kopeck, 10 francs, whatever you happen to have, 50,000 lira, whatever it used to be, that was your money to spend and yours alone, when to spend it, how much you can, where you could spend it, how much of it you were going to spend. And now they're even talking about, well, if you're not spending your money the way we want you to, we're going to start saying, like Modi did in India, but not for this reason, that money is only good for 3 years. If you don't spend it, you lose it. Or you lose, it goes on a scale. It's only worth 90%. I mean, they already get you on inflation, but they could easily do this. They could say that certain bills dated from the Mnuchin Treasury Secretary, dated 2018 issuance, by 2021, if you're still using those, that $20 bill is worth $19.50. And that's what you're going to get when you go into the store. They could do all kinds of things. And that's because your money is not your money. When you have fiat, there's nothing to say what that money is worth other than what they tell you it's worth. Now, generally, they just tell you it's worth $20 and they let it go at there and they go for their inflation. But they could tell you you're not allowed to have your money. Your money is going to be worth less. Your money can only be used on certain days of the week. There's no limit once it's fiat. And once they decide to go negative, and once they decide to go cashless, on what they can say your money is. Now, you'd say, well, no one will stand for that. Well, if all the countries do it, that's what money becomes. I don't know if you call it money at that point, but that's what people transact in. But you see, I believe that drives people away from that kind of money. And a lot of the people who like gold and silver, I think they conflate the issue with cryptocurrencies as, well, they're cashless, they're digital, so they must be a government plot to control you. That belies any understanding that no one can stop you from using a cryptocurrency. Yeah, they can shut the internet down. They can tell you you can't use it. But there is no barrier for you using it. So, for example, if they decided to close the banking system, you can't spend your money that's in the bank. There's nothing you can do about it. Now, if they decide to tell you you can't spend your Bitcoin, well, or you go to jail, you can still spend it at risk of going to jail, but they can't stop you from spending it. And it's the same with gold and silver. They can say you can't spend your gold and silver, but you can spend it. The other thing the government can do is they can say that the $20 bill is now worth $10, or the $20 bill is now worth $200, whatever they want to do. They could say turn in your 20 and get 200, turn in your $20 bills and get 10, turn in your 20 and get 20 that only lasts 3 years. Any number of things because it's fiat. They can also tell you your gold ounce is worth 10 cents. You could say, okay, thanks for telling me that. And then you go to somebody and you say, I'd like to buy something. And he says, okay, well, that gold's worth 10 cents. You say, no, I'm not going to value it at 10 cents. And then the guy says, I'm not going to value it at 10 cents either. I think it's worth $1,500. And you say, sounds good to me. And you transact. Even if it's illegal, they still can't control the price to the extent where they can with fiat currency. Fiat currency highlights that the money you have is not your own. The Dostoevsky idea that money is coined liberty is nonsense. Now, when the money itself used to reflect, and the governments used to strive to say the amount of silver or gold in a coin is basically what it's worth, and that's what we stamp on it, then it was money. I mean, it doesn't matter who coined it. If the government is a good steward of putting together currency in the form of coins that reflects how much the intrinsic value is, then there's not a problem. That's where proponents of the gold standard, they like that. The problem is they can immediately say, we don't like that. We're not going to do that anymore. So that's what's happening with the cashless society. There's a push again now, given that most central banks are moving towards a negative rate environment. They're anticipating that people are going to do precisely what we were talking about, and it's not criminal, it's just the natural reaction. You do not want to lose your purchasing power. But you're now at odds with the central banks who want you to spend money. So they're basically telling you you can't save, you shouldn't save, you'll be penalized for saving. Or in the case of Salvini's Italia, we're going to tax you and nothing you can do about it. We're not going to let you have the money. So let's see what you guys think. But that's why we're getting the cashless society push back. I don't mean push back, but I mean that the push for the cashless society is back in vogue, because it really is a complement to the negative interest rate environment. In fact, negative interest rates only work as long as people view them as temporary and people don't start to think about alternative ways of protecting their savings. And if that doesn't work, they will look to non-governmental cash. And this goes to Hayek's competing currencies. And now normally a government should win the competing currency, because there's the old idea that most people are going to trust the government to issue a gold coin. And even if you think you don't believe that, most people do buy, even stackers, even more than half of the stackers buy government issued coins. There is some comfort in an Australian silver kangaroo, a Canadian gold maple leaf, a U.S. gold pre-1933 coin, that somehow the governments are going to be good stewards of making the coins, where you might have privately minted coins, less trustworthy. I don't know if there's any evidence for that, but I mean, generally governments, when they counterfeit, they don't counterfeit the specific species coin. They just print up money at the central bank. All right, so that's all I have for tonight, but I want to see what you guys are saying, what you think of this cashless society push, because it really does. It ties into the negative interest rates. It's all one and of the same. You can't really have negative interest rates work unless they have some kind of control over what's going on with the money. All right, let's see what we all are saying over here. All right, what do we got? We got a small crowd tonight. Yeah, that's what's happening to the Smaulgld channel. It seems to be, I don't know. Anyway, tomorrow night will be Saturday Night Silver with Smaulgld. Spread the word. Sunday will be Solid Gold Sunday with Smaulgld. On Saturday night it'll be just silver. On Sunday night, just gold. I think Monday we're going to do just crypto, because then we'll have, that'll be the first day of the backed launch. We'll see how that's going. So far, the run-up to the backed launch has not really, let me see if there's any change tonight in the crypto price. It's not really done much. I think the price ran up far in advance of the immediate launch. No, crypto right now is pretty much flat. All right, let's see what we got in the comments here. Fiona is here, Max is here, Phil is here. Hello, everyone. Where's Barry says, sup, muggers? Ken Stingus is greeting. Jane Canning. Here in Australian government looking to ban cash transaction over 10 grand. Yes, we did cover that. I covered somewhat middle of the program. That's another reason we prompted this broadcast. Yes, very dystopian. I think the metals might spike Sunday night, says Dibble. Why do you think that? What's going to happen Sunday night? I'm just surprised that gold and silver and alternative currencies are not spiking more, because right now this is not like they're thinking about negative rates. This is in your face. This is 35-40% of the bonds outstanding. You got $18 trillion, $19 trillion of negative yielding bonds. You got all central banks talking about some type of easing, some type of cutting rates. And this was supposedly the year that the Fed was supposedly normalizing, raising interest rates, selling off the balance sheet. Now they've done 2 interest rate cuts. And I don't know if the markets just trust the plan, like cue my mom, but it should be very frightening if you think that your money is secure. If you think you have cash and that's coined liberty, whose liberty? All right, Nomadic Giant is here. In the mint, Mark SI, when the majority of peeps don't have any money, they won't care what happens to those few who do. They'll be actually happy that they're coming after those who do. Well, that's true always, yes. People are not concerned about the liberty of others. They're concerned about their own liberty. It's a very astute point. And that's why, that's that old expression I think that they used with the Holocaust is first they came for this one, then they came for that one, then they came for that one. No one paid attention, and then they came for me, and there was no one there to help me. That is definitely true. You see it all the time. People generally don't rally around in mass when there is an injustice. Most people feel injustice when it's done to them. That's definitely factual. Yeah, so you see these things going on, and most people look the other way, or they do get mad, but they don't really do anything about it. And then they wonder why no one does anything that helps them. Something happens to them. But I do digress. Let's see if there's any other comments. Otherwise, we'll let you go, and we'll be back again tomorrow night. I don't know if the chat is shut down because it just stopped. So, here we go. Fiona, any insight into what is going on with the overnight lending? And Nomadic Giant's asking the same thing. I'd love to hear about the repo market stuff as well. Yeah, the Fed has been going to town. I think they did it again today. So they've been doing in the repo market. I think they're up to about 150, 200 million. I call it QEPO, because it's essentially the same thing. It's central bank intervention to make sure there's liquidity in the market. And I don't think it's a big deal, mainly because this is what they do. The central bank has already, years ago, you go back to 1987 with Greenspan after the crash, he says, we stand ready, willing, and able to inject liquidity. You got Mario Draghi, whatever it takes. These short-term overnight things, what's the problem? I don't view this as like some people are losing their minds over like it's outrageous. It means this, it means that. It doesn't mean anything. It just means that the Federal Reserve Bank has the ability to, quote, inject liquidity. And that's already there. They call it the toolbox, QE, repo, whatever they want to do, buy assets. So people getting excited about this, I'm not, because it's just par for the course of what they're doing. I think the much, much bigger thing is not that. It's not that we're going to have some type of collapse. Everybody's looking for a one-off. Everybody thinks that there's like something is going to happen. No, it's already happening. It's the boiling frog thing. You're going to negative interest rates. Central banks intervene whenever and wherever they want. They buy stocks. They buy bonds. They drink champagne cocktails. They do whatever they want. So that's the realist story. The real story is not the repo. The real story is not Mario Draghi saying A or B. It's basically they're all driving rates lower. They're all considering buying whatever assets they can buy, stocks, bonds, ETFs, repo. Who cares? It doesn't matter because they have the ability to do it. No one's stopping them from doing it. Instead of looking at their power to do it, people are wondering, what does it mean when they do it? And I think you've already missed the point if that's what you're worried about. All right, I think that's it for tonight. So we will see you tomorrow. Silver. If you got questions on silver, we'll cover that tomorrow. Sunday, gold, and Monday, cryptocurrencies. All right. Au revoir. Buonanotte. Buenos tardes. And good night.